Hello traders, this is Fawad Razak, other market analyst for the index. Today is the 12th of February. So Donald Trump has just come out and said that he's had a productive talk with Russian President Putin, and that they discussed Ukraine, the Middle East situation. And as a result, we've just seen the German DAX index hit a new record high as concerns ease about Ukraine. So crude oil prices fell a little bit from their earlier lows. Oil prices were down already on the back of the inventories report that came out showing a bigger build than expected. While we're looking at the economic calendar, we've also had inflation data from the US earlier coming in stronger than expected, with the headline print of 3%, which was a little bit higher than expected. And that caused bond yields to rally across the board, causing the 10-year to break above that 4.6% level, and it's now pushing higher still. So as a result of the higher bond yield, we've seen the dollar-yen break out above the 154 resistance level, which had been support before it broke down last week, remember, and the retest of this level hasn't held as resistance, potentially paving the way for a run to 155, which is the next key level to watch on the dollar-yen. A lot will now depend on bond yields in the US. For as long as they continue to push higher, I think that's going to keep upward pressure on the dollar-yen. But if Trump manages to end the Ukraine situation, then that could put down pressure on energy prices, potentially bringing inflation down, and therefore bond yields could fall back, and that could in turn support the low-yielding currencies like the Japanese yen. But for now, at least, the path of which resistance remains to the upside, and let's see where we go from here. In terms of key levels to watch, 155, as I mentioned, is the next key resistance level to watch. Beyond that, there's nothing significant until 156, 157, round handles. On the downside, 154 to 153.70, the shaded area, is now going to be an important short-term support zone to watch, given that it was previously support and it didn't hold as resistance. So that's the first short-term support to watch. Below that, 152.60 is the next key area to watch, where we have the 200-day moving average conversion with the base of the breakout today. If we get back below 152.60, 153.50 area, then I think that could put the bulls in a spot of bother, potentially leading to a breakdown towards 150 next. Crude oil prices hit fresh session lows after news broke out that Donald Trump had spoken with Putin, and prices were already under pressure on the back of those inventory data and concerns about demand. But let's see if prices will bounce off their lows or whether we'll close near the session lows. If we close around current levels, then that could potentially pave the way for a drop to this bullish trend line and key support between 70 to 70, the shaded region, where previously crude oil had found resistance and support from. On the upside, the low from Tuesday's range comes in at 72.15. That is the first short-term resistance level to watch. If you go above that, then that could potentially pave the way for a run towards 73 next. Beyond 73, the 200-day moving average comes in at 74, and then we have the psychologically important 75 level next. Now, those are your key short-term levels to watch on WTI. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. See you next video. Take care.